If you grow a business 10% every quarter, you grow that business more than 50% every year, which is exactly what Tesla wants to achieve. So they are on track.
Obviously, these margins are dropping, Ross. How much was expected relative to what they reported?
Well, I think they were kind of in line with what was expected, around 18 and a half. And
demand is so far off the hook, you can't even see the hook. So that's really not an issue. I do want to emphasize that the Cybertruck has a lot of new technology in it, like a lot.
All that and more, so let's get to it. Don't look at me. I don't know what the going on. Tesla down about 9% today following their Q2 earnings. And you would think they had a miss of gigantic proportions, right? You would be wrong. Another record-breaking quarter for Tesla, and this is how the market reacts. All I can do is buy more shares at this level and keep it moving. To give the stock a little more context, for the week, Tesla is down 3%, up almost 4%. For the month, and dating back 52 weeks from now, still up about 7.5%. Now, has Tesla found a bottom? Who the fuck knows? Tesla has almost lost $100 billion in market cap, with a 52-week low of 101.81 and a high of 314. Your guess is as good as mine. As it stands, my call that expires in September has lost almost 50% of its value. But we have 6 weeks to improve the position. I'm not ready to panic sell out of it just yet. The really smart play would have been to place a put just before earnings, but as you can see, the implied volatility was just a little too rich for me to engage in. Anybody making this call got turned upside down real quick. There's no way to predict that the market would react this sour to a pretty decent earnings Tesla put forth.
What's happening from now? From now, you have the Berlin factory ramping, learning how to do cars with less defects, with less rework, and with higher volume. Same thing in Austin. We have input costs normalizing, things getting better, logistics getting easier, and all these things are significant tailwinds on the gross margin of Tesla. And at the end of the day, remember, Tesla is a tech product in which input costs are going to come down steadily within 2-3 points a quarter over the next maybe 12 to 18 months. And so that's going to fuel the gross margin. And our view is that unless Tesla cuts prices again by 10%, gross margins now are going to start creeping up quarter after quarter.
Well, one reason they were cutting prices is in part because production was outstripping demand. And of course, they wanted to preserve their lead in market share. In terms of its full year production forecast, 1.8 million vehicles is lighter than what analysts were anticipating, 1.88 million. That's a good thing, right? What is your confidence that Tesla will hold to that?
Well, it's that's really what the quarter demonstrated, that Tesla can sell all the cars they're producing, and the adjustment variable is going to be pricing. Tesla is not going to compromise on ramping volumes because that's their future. If you want Tesla to be successful in the long run, you need Tesla to ramp volumes, and they can't delay their production ramp because you have a slowdown in demand because of interest rates raising and a more challenging economic environment.
Yeah, you motherfucking right. Tesla can't control the macroeconomic environment, but with industry-leading margins, you're able to circumvent those high interest rates that are going to raise your consumer's monthly payment for your vehicles. You do what you gotta do. That might sound like a poor business strategy to those that need their cash now. You better call AG Wentworth. 877 cash now. You know what I'm saying? But Tesla is making money hand over fist. $25 billion this quarter. But we're a far cry from 293. Either way, your boy's gonna continue buying.
Faster than production. 10% sequentially versus 9% sequentially. If you grow a business 10% every quarter, you grow that business more than 50% every year, which is exactly what Tesla wants to achieve. So they are on track, and it's absolutely fantastic.
So when we talk about this idea here of how you sort of, match up or sync up the production levels that they're targeting, the 1.8 million vehicles in production with actual sales here, do you think not so much are they going to be able to sell those vehicles, Pierre, but are they going to be able to do them at a price point that is, commensurate with past profits and past margins?
Well, Romain, I think the level of confidence on their ability to deliver on the production side of things is very high. on deliveries and the logistics around deliveries that are not that easy, you know, when you're like close to exceed like 500,000 units a quarter, it's very high. On pricing, you know, it's really a question for your macro analyst. The one thing that makes me feel very good about it is that Tesla basically cut prices between 15 and 25% on a car. Can you imagine that in the last 6 months? And you've seen this price cut generating a massive boost that allowed Tesla to grow deliveries 10% sequentially in a market where other auto manufacturers are selling cars that are like rebuilding dealers' inventories. The reality of demand at the end of the market is an absolute disaster. So my level of confidence today is that the worst of the price cuts are behind us. They might still need to cut prices here and there to keep growing, and if they do it, that's the right thing to do. But I think that from now, like, the worst is behind us, and so maybe price cuts don't bottom quite yet, but they are not very far from a bottom, which means that gross margins from here probably expands with a very high level of probability.
It's fairly safe to say that this is probably the worst you will see the margins, but it truly doesn't matter. If they have to cut the margins down to 15%, which is what I have in my bear case, I'm still satisfied with that as long as they're breaking record delivery numbers and production numbers quarter after quarter. 15% is still industry-leading margins. Honestly, I don't think people understand how hard this is to do.
Tesla share is a little bit uneventful here in the aftermarket, but we do have the numbers, and we do have Mr. Ross Gerber with us this afternoon, President and CEO of Gerber Kawasaki Wealth and Investment Management. So obviously these margins are dropping. Ross, how much was expected relative to what they reported?
Well, I think they were kind of in line with what was expected, around 18 and a half. And, you know, that number is okay. I mean, we saw the deterioration of margins from last year, which was, you know, maybe a unique year, but it's also deteriorated a little bit from last quarter as well. So we're still seeing the pressure, but not as much so. And I think this could be the bottom for margins, which is very positive for the stock.
Automotive gross margin coming in at 18.2%. I had it at 19.5%. Color me optimistic. Despite all that, 18.2% is fairly decent. And whether or not this is the bottom of the trough, I really don't know. Tesla's going to do whatever they've got to do in order to keep delivering vehicles to customers. Thanks to the high quality of their products, the Model Y is still one of the best-selling vehicles on the planet, despite customers paying a premium in this gross macroeconomic environment. That should tell you everything you need to know about Tesla's demand.
Well, what makes you think the bottom for margins, Ross? I mean, aren't they about to launch this Cybertruck? Isn't that going to be expensive?
Well, no, because, you know, that's CapEx spending that's been spent, you know, consistently each quarter. So as they're spending more money in certain areas, they spend less money in other areas because they were ramping Berlin and Austin last year at this time. So I don't see an increase in cost due to Cybertruck.
That's a big deal.
Is out of line. Yeah, but, you know, they operate this way. It's very methodical the way they invest in certain things at certain times and then in other things so that it's not all lumpy. At the beginning of Tesla's history, it was a lot of investment up front, but I think now it's a very consistent investment. It's about $2 billion a quarter in CapEx they spent.
Total operating margin, as you mentioned earlier, that well, you mentioned the automotive gross margin, right, in your statement, just to make sure we got them separate here, because the operating margin for the whole company drops down to like 10%.
10%, right.
Okay, which is a pretty big drop off from last year. Does it all come from the cuts to the prices, Ross? Is it entirely self-inflicted in your mind?
I don't know if it's self-inflicted. I think that things have changed from last year in a lot of areas, and certainly interest rates being one of them, you know, Elon's perception in the public being another one of them, along with just the fact there are competitors now that are maybe not like Tesla-like, but certainly, you know, you do have competitors, whether it be Rivian, Polestar, or whatever. So that said, Tesla sold a record amount of cars, and they just had to do it at lower prices. But I don't think they have to continue to do this, because the price of a Tesla is now within reach for a large amount of consumers. And my belief is that they should use other levers to sell, like advertising and things that I think will have a much better return than just lowering prices. So I think we got that through to Elon, and I think that hopefully is what they'll do instead of adjusting prices down. which would hurt margins further.
Can't disagree more, but let's not kid ourselves. They're not selling 10 million vehicles this year. They're gonna hope to sell 2. They don't need any help selling those 2 million vehicles. Once they get up to 8, 10 million vehicles a year, then yeah, advertising might need to be in the cards to gently remind the public that Teslas are out here ready for you to purchase. But what do I know? I'm just some idiot on YouTube. The average selling price of a Tesla has come down, but when you advertise, I don't think you're targeting these individuals as of right now. Once you have a product that is below $30,000 without incentives, then you might consider some more traditional advertising after the ball game, next to some popular primetime shows if anybody's still watching TV. But until then, Tesla isn't producing nearly enough volumes to require a commercial. I mean, if you've got the best-selling vehicle on the planet, you're probably doing something right.
What about their comments as far as production in Shanghai? Don't expect a meaningful increase in that run rate. What is that a surprise? What does that mean?
Well, it's 2 things. One, Shanghai was already at full production. It was really about, can we, really expand this production? And now I think he's looking at the macro environment in China and realizes that the Chinese economy is not good, and Chinese policies are not good for growth. And Xi has put China, and this is a whole nother interview for another day, but in a very difficult position economically. And so I think he's hedging his bet a little bit of how much do we want to make in China. And I think that's smart.
Okay. So recognizing that things there are a little bit soft, the potential for surprise here, what is it, Ross? I mean, do you feel like they're very smooth sailing, especially in the macro backdrop, which seems to be brewing a lot more optimistic? Because the chart's one of the few that still is technically downtrending, lower highs if we trace it back to the records. Can we turn this around on that report?
Well, I don't know if this report's going to be the catalyst to really launch it into the stratosphere again, because remember, it was trading at 100 times earnings at that time, and now it's looking more like 50 to 60 times earnings. So that multiple contraction, a lot of that is because of interest rates, to be honest, less than performance. Although performance wasn't great at the beginning of the year, and it's now improving. I think the story that isn't being told is Tesla storage. This battery storage business grew by 220%. Energy storage as a whole and solar grew by 74%. And this is the part of Tesla people just don't really talk about because it's not that sexy. But the battery business is phenomenal and growing well. And it looks like it has about a 20% margin as well. So, this is a great driver of future growth for Tesla, relevant of automotive. And now Tesla is on a run rate of being a $100 billion revenue company. And one can argue that its valuation is justified in here. And for investors, I think, there's not a lot of big cap companies growing revenue by 47%. So it's an impressive result by any means, even though margins are lower.
Now that I can get behind. Tesla's energy division is doing magnificent. Can't wait to see what Q3 has to offer as the demand for these products continues to grow exponentially.
A call sending shares of the company lower this morning, down 4%. Musk warning that vehicle production will slow during the third quarter and noting that Tesla will continue cutting prices if rates continue to rise. He did not hesitate to blame the global economy and macro conditions for just about everything. Here's a glimpse of what he had to say.
And if somebody's got a crystal ball for the global economy, I really appreciate it if I could borrow that crystal ball. DM us. Yeah, exactly. DM me on Twitter. It should be a note on Twitter. One day it seems like the world economy is falling apart, and the next day everything's fine. I don't know what the hell's going on. To be totally frank.
Very Musk-like comments there. Yahoo Finance's Pras Subramanian was intently listening, as many of us were, and he joins us now alongside, of course, Steve Sosnick, Interactive Brokers Chief Market Strategist, for this very exciting edition of After the Call. All right, Pras, let's get into it. What's your top takeaway?
What the hell is going on, in the words of Musk?
To quote Elon Musk.
Yeah.
I'm going to try to verbalize my answer like he mumbling and stumbling. Let's see. A lot going on in that call, right? We had the strong headline numbers after the bell, but then Musk immediately sort of knocking the stock with this Q3 production warning, which sort of caught people off guard. A lot of investors were commenting on that. But then riffing on a number of topics we'll get into. First off, the big focus on margins, of course. Everyone focused on, is this the margin trough? Is this where we're at? You know, they disappointed with that 18.2% overall gross margin there. So there's some talk about that was disappointing, but also, hey, the automotive gross margins actually were better than expected. So here's what Musk had to say, sort of batting away a lot of these issues on what people want to hear on margins.
Oh, man. Where's that crystal ball again? if I may, it's like, look, the short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly.
Yeah, maybe talking about autonomy, saying that it had like an unlimited gross margin, like 100%. So
people laugh. But if history is any indication, Elon might just have the last laugh. Tesla is a long play. Maybe can make a little money in the short term. You had a put on Tesla right before the earnings call. You've made a grip, and congratulations. But if you're short the stock in the long term, peace be with you, brother.
Not willing to talk about those particular issues, but you know, a number of these came up, of course, FSD and charging, so we can talk about that. But yeah, that was a big takeaway, was what he said about gross margins.
Before we get to some of the other issues, I want to zero in on FSD for a minute. Full self-driving, in other words, which is not really full self-driving, but that's, you know, not yet.
That's the intent.
That's what they're calling it, but you still got to sit behind the wheel of your car. So he mentioned on the call, he teased out that they are having discussions with a major automaker to license that software. So when he says full autonomy is the thing, that's what he's talking about.
Yeah, that would be...
Just to make clear.
Exactly, like white labeling that product, just infinite amount of money from a licensing point of view, because you're already putting in that fixed cost to develop the product. He said that they had, you know, it's not news that he was wanting to license the product. It was news that he said a major OEM was in initial discussion. So that was a big deal. People are sort of speculating on who that could be. Hint, hint, maybe it's his first charging partner. I don't know. We'll see. I'm not saying anything about that. But so
Ford would make the most sense. Blue Cruise is under a lot of scrutiny.
CYBERTRUCK came up a lot. People asking about that timeline. Like you said, still a bit vague, but they did say that they would deliver initial cars this year. And production was going to start this year. Tooling has begun at the factory. So it is on track. And then he said high volume production in next year. So here's what he had to say about that CYBERTRUCK and also the demand story for that truck.
Demand is so far off the hook, you can't even see the hook. So that's really not an issue. I do want to emphasize that the CYBERTRUCK has a lot of new technology in it, like a lot. It doesn't look like you know, any other vehicle, because it is not like any other vehicle. And the production ramp will move as fast as the slowest and least likely element of the entire supply chain and internal production.
I think when he says production ramp, everyone sort of thinks that, Elon, you've said this before about many products that have taken years to come out. Are you really going to hit that end of year goal? It seems like they're on track. They showed that one vehicle at the factory that rolled off.
But we all thought that one vehicle was the beginning of the production, and apparently it wasn't. That was just like a demo vehicle,
I think it was they call it a release candidate. It's like like they roll off the line. They got to make sure the factory line's working. They didn't really get into that much, to be honest with you. So that's what I'm speculating when they said release candidate. So you're right. I mean, we don't know if that line is fully operational. So who knows?
Steve wants to jump in on this. Go ahead.
One question that I had was, you know, the reason for the earnings beat was $400 million in other income. What was the other income from? Did you get a good handle on it? Because I did not.
You know, it's funny. I think that was what 9 cents of EPS. Yeah. So it would have been a miss if not for that. I'm not sure what that is.
I want to say that's a portion of the deferred revenue when you're talking about full self-driving. That's $15,000 per vehicle, and anybody like myself that's on the subscription model, that's $200 a month. In fact, on the call, I was hoping one of the analysts would have had a question for that. Instead, they were talking about fucking cents. I wanted to know where that other income was coming from, and nobody asked the question. Would they have answered it anyway? I'm not so sure. But that's the one thing from the call that I did not get. What is this other income? What is it from? And my uneducated opinion is deferred revenue from full self-driving.
They break out solar and they break out the other businesses. I heard it might have been a currency gain, that they actually had an FX positive outcome on some currency they held, and that could have been this 9 cent.
Isn't that a problem though, when a guy who covers the company this closely and a guy who tracks the company this closely, like Tesla, a company of that size, don't they need to be a little more transparent about what that is?
And they're basically like saying on that call, trust us, don't worry. Like, even though he says he has no crystal ball a couple of times, he makes some bold statements saying, you know, he doesn't land on a specific date on the Cybertruck, and says basically it doesn't matter, and that Tesla is an epic long-term investment, quote.
Well, it's worked out so well so far for people who have invested in it. Okay.
In conclusion, Tesla beat earnings and the stock market beat Tesla stock down. Strange world we live in. But instead of being distressed and panic selling all of your Tesla stock, look at it as a golden opportunity to build more shares. That's all I got for you today. Be easy. Peace.